How do you know if you're actually ready to buy your first home? Is it when you've saved enough money, or when interest rates drop, or when you're just tired of renting? In this video, I'm sharing the 5 biggest signs that you're ready to become a homeowner so you can move forward with confidence instead of wondering if it's the right time. But before we get started, if you're thinking about buying your first home in Huntsville or Madison, I help people just like you every single week navigate the process from start to finish. If you would like a personalized game plan based on your budget and your goals, schedule a free first-time home buyer strategy call by clicking the link in the description below. Now let's dive into the 5 signs that you're ready to buy your first home. Alright, so let's dive in. This is the 5 signs that you're ready to buy your first home. It's not about timing the market. You're hardly ever going to be able to do that, so you've got to focus on the things that are within your world that makes you ready. Basically the things that you can control, and those are the things that will determine whether you're ready or not to buy your first house. Alright, so the first sign is you've built a stable income. This is what lenders look for. They're going to look for 2 years worth of steady paychecks, showing that you've been at a location. It's best to be at a place longer than 2 years, and it doesn't necessarily have to be like that. It can be like a lateral move. Say you move from one company to another, but your income is either the same or increased, and you're in the same industry. So those are the type of things that lenders look for. And that's the first thing, is just to make sure you have a stable income so that you can be able to afford the things that you're going to have to put out every month when it comes to purchasing a house. All right, moving on. Second sign, you've saved more than just the down payment. Down payment's a big part, but it's not everything, because there's other things like closing costs, earnest money, moving fees, and setup fees. You want to also have like an emergency fund if something, there were issues when you first moved in that needed to be addressed that you didn't catch during due diligence, because that does happen sometimes, but most of the time you try to catch those during that inspection period. But like I said, it doesn't always work out that way. But one of the big things I see is earnest money. That's money that you're going to need up front. It's usually 1 to 2% of the sales price. So if the house is $250,000, usually that's $2,500 that's up front, and you usually write out a check and give it to the closing attorney. That money is used towards the complete, or the total sales price. So like I said, if it's $250, and that's going to take $2,500 off that $250 at closing. Closing cost, it says here, typically 2 to 5%. You can always ask the seller to pay for closing cost. That's just something that could be negotiated during the offer period. Things like moving trucks, pods, new furniture. It's a big no-no. I'm just going to say it right here. Do not purchase furniture before you close. That is a major expense that can flag and cause you, flag your credit and cause you not to be able to close on the house. That's just one thing that happens sometimes, and it can mess up a transaction. So those are the things you're going to have to save for to be used after you close on a property. Sign number 3, your credit is in good shape. Credit matters because it shows that you have a good standing history of paying either your credit card or your bills or utilities. They're starting to have where you can submit your utilities and rent and show that you've used, or that you've paid in good faith, that your monthly payments and stuff. So FHA minimum is 620. You want to be above that. Typically scores 740 and above unlock the most competitive rates. So you want to have like less than 30% utilization on all credit cards. You don't want to be maxed out on the credit cards. You want to avoid opening any new lines of credit. Credit cards, buying a new car, all that stuff needs to wait. And then you want to check your credit report for any kind of errors or anything to try to fix that before. There's people out there that can help you fix those. you can reach out, and I have a couple people that can help you fix your credit, working through some things, and that's just something that people don't really think about. I think 620 is good, but you may not get approved at 620. So it really depends on your certain things like your debt to income ratio and all that kind of stuff. So you want to reach out. I've got a couple lenders that I can recommend, and they can do all that calculation and everything for you to let you know, that you're going to be in good shape for, credit wise. Sign number 4 is you're ready to stay in one place. There's one thing that I've seen with younger people right now. They're moving a lot. Every 2 to 3 years, it seems, people are jumping, trying to, move along in their career, and they may not stay in the same city doing that. And so once you get in a place where you think that you can stay for a long time and that you have a stable concrete-ish type position, then you might be ready if you're looking to stay in a place for 3 to 5 plus years. Say 3 to 5 because you can build some type of equity, hopefully during that time frame, where if you were to have to sell 5 years down the road because of your job, then you would have some type of equity built up so that you can put that towards the next property you purchase. And the 5th thing is you're tired of renting. You're tired of landlords. You're tired of things not being fixed. That's wrong with the property that you're staying at. You're tired of paying somebody else's mortgage. That's just, you want to own something and be able to build equity in your own thing instead of somebody else's. I've helped a bunch of people in the past that rented and just wanted something of their own, and it's a great feeling helping them be able to purchase their first home, even if it's not their first home after renting. So it's just those 5 things together is the 5 signs that you're ready to purchase. If all those line up, then you. All right, sorry about that. Dog started barking, but if there's those 5 things line up, that's a good sign that it's time for you to purchase a new property. But another bonus sign is that you know what you want. You know what your budget is, preferred location, must-haves, and the needs of where you work and things like that. How far you want to commute. If you know these things, then that's really a good indication that if you move forward, that you'll be happy with where you're at and what your decision to purchase a property. All right, so busting common myths. I need 20% to buy a home. That is 100% not true. There are different programs out there. FHA has a 3.5% down. You can do as low as 3% with a conventional loan. There's USDA if it qualifies, 0% down. And also, if you're a veteran and qualify, there are VA loans that don't require any down payment. And so I can get you in touch with a couple lenders that they can walk through what you could qualify for, and you may be able to get buy your first house without 20% down. So that's a big myth that you need 20%. It's something that's needed in the past, but it's not quite like that anymore. So another one, my credit has to be perfect before I can buy. Like I said, it doesn't. You just need to have a good credit history of being able to pay your bills and stuff on time. It doesn't have to, there's certain things that affect, but the main one is showing that you can pay your bills on time. I should wait until interest rates drop. No. Who knows what's going to happen? They could go up. They could double. Who knew that we'd be where we're at right now? Everything looked great a couple years ago, and the 2.5 to 3%, and now we're up to 7. Who knows? They can go up to 14. 30 years ago, the interest rate was 14% or so. So the best time to buy is when you're ready, regardless of what might happen with interest rates, because you're just never going to know what's going to happen. So if things get better, then you can always try to refinance and stuff like that down the road. But you always run the risk if you wait of them getting worse than they already are. So it's one thing that's kind of hard to coach on just because of the unpredictedness of interest rates. Who knows what's going to happen? So, all right, now isn't the right time. The market is too competitive. Here in Huntsville, it is competitive. There's a lot of people moving here, but if you have a good agent with you that knows how to strategically offer on houses, then you're at an advantage over somebody that may not have an agent, or working with somebody that's not that doesn't work with a lot of buyers, especially like first-time home buyers, and be able to walk you through the process and know what to offer and how to negotiate. There's agents that have a good track record of being able to win multiple offer situations and things like that. And those are the ones you need to look for. All right, first-time home buyer checklist. Let's move me out of the way over here. And like I've said, these are the 5 things: stable income, sufficient savings, healthy credit, long-term plans, and equity mindset. All right, why Huntsville is a great place for first-time home buyers. Huntsville is still relatively low cost of living when it comes to single-family housing. There's a lot of new construction. You can get into a really good new construction house for a really good price compared to other locations, that has this size of property or size of population. But there's all types of different neighborhoods and stuff in the city. So if you want something that's a little bit older, if you want new construction, there's all types of different neighborhoods in the Huntsville area. There's just a large selection, and at a relatively good price. So Huntsville is definitely good for first-time home buyers. And if you're ready to move on, like if you start a family and you end up having multiple kids and you feel like your house is too small, you also hopefully have built really good equity on that property when you purchase 3 to 5 years ago, and you're able to move up to a bigger house and use that equity from the first to be able to offset the cost of the second house. I've helped multiple people do that over time, and they go from a really nice starter home to a really, really nice house. They've upsized to a really, really nice house. All right, in the buyer process, step 1, strategy call. You want to talk to an agent and a lender, figure out what you can do financially. That's moving into step 2, creating a finance plan with the lender. That's the very first thing that you should do, is talk to both an agent and a lender. You can't do anything if you haven't talked to a lender if you're going to use financing. Before you should look at any house, you want to have a pre-approval letter, because for one, you may not qualify, and 2, you may not, if there's a house you really like and it seems to be a house that has a lot of attention on it, that seller is not going to, likely not accept an offer from somebody that doesn't have a pre-approval letter that's submitted with the offer. So after all that's that pre-approval is done and everything, then step 3 is looking for a house. Go on house tours to see what matches what you want. You're always going to have some give and take when it comes to different features you want in a house, but it's good just to get out there once you're pre-approved and see what's out there. And if there's nothing you like, then you can go the new construction route. That takes a little bit longer. It takes 6 to 9 months to get into one of those properties. But if there's nothing on the market that you like and there's must-haves that you have to have, then new construction might be a route you can go. And then, like I said, you want to go in with an offer that's strategically placed, so that you win the offer. So, and then once that offer is accepted, you go into inspections and underwriting and all that stuff, and then you get to closing. So those 5 quick steps on purchasing a house. If you would like any more in-depth information about each of these, feel free to reach out. Phone number is 256-542-0226. You can also schedule a strategy call, like I said at the beginning of this video, by clicking the link in the description. We can walk through this process in more in depth if you would like. All right, so final thoughts. Buying your first home is one of life's great milestones. It's the American dream. It's what this country is all about, is being able to own a part of this country, purchasing a house. It's much more than the square footage and interest rates. It's about, building a family, having a place that's truly yours. So, like I said, these are the 5 signs that you're ready to purchase. If you would like any kind of clarification on anything, don't hesitate to reach out. You can send me a text, give me a call. Once again, phone number is 256-542. And if you learned a lot from this video, I've created a playlist just for you. You can click right here. It's in this box. This is a playlist that has all kinds of information on how to purchase your first home. Go ahead, click it. I'll see you over there.